Hi there, I'm Irk and this is my channel, Get Irked. In this episode, everyone's calling EV upstart Rivian the next Tesla, but is that a good thing? In this episode, I wanted to talk about the new EV maker, Rivian, ticker symbol RIVN. This EV maker has actually been around for quite some time. However, it only just came public in November of 2021, right at the tail end of an exciting year of tech IPOs and upstart plays that were doing really well up until January of 2022, when the Fed announced that it would be tightening quicker. Whenever the Federal Reserve tightens a little bit faster than anyone expects, it makes the growth prospects for tech plays like Rivian look really bad, and therefore the stocks tend to sell off. However, if you're willing to hold on for the long term, Rivian might be the right play if you missed out on Tesla's initial run. First, we're going to take a look at Rivian's fundamentals, and after that I'll give you a buying plan of what I would do if I didn't already hold shares in the stock, and then I'll show you my own position, where it's come from, and where I plan to go from here. Rivian is currently a $76.22 billion company, and for a company that has absolutely no earnings, that's an incredible valuation. In fact, with its first quarterly report since coming public, Rivian reported an earnings per share of negative $25.37 per share. So it's not just losing money, it's losing a lot of money. However, that is to be expected for a company this new. Rivian is considered overvalued by pretty much any standard metric, including Yahoo Finance. And this is due to the fact that it is a high-tech growth stock. With announced partnerships with Amazon and its winning of the 2021 Motor Trend Truck of the Year, Rivian is already off to a really good start. However, since the fundamentals don't line up with the stock at all, we're going to have to look at the charts and try to figure out what we're going to do with something so volatile. Despite rumored IPO prices as low as in the $40 range, Rivian actually came public on the open markets at $106.75. Over its first couple of days, it looked like Rivian was going to do pretty well and hit a high of $179.47 before it started selling off dramatically. Over the next few days, Rivian came down and touched its original IPO price, broke through it, and created a new low here at $100 even. That low held for a couple of days before it fell through right before the end of the year, creating a new low here at $88.40. When the Federal Reserve news came out in early January 2022, it really sold off, creating a low down here at $75.13. However, with a stock so new that's already overvalued, it's important to remember that pretty much anything is possible, so you can't take any low for granted. So let's use Fibonacci Retracement to determine some levels and try to forecast where it is Rivian might find support in the future. The way I like to do this is to start with the low of the first day of trading and then draw to its all-time high to develop levels. You can see how Fibonacci Retracement is sometimes pretty accurate when you look at the 78.6% retracement and you see that there was a lot of price action in Rivian over that particular retracement line. However, when it breaks through the start, you have to look below and see negative retracement lines to figure out where it might find support, and you can see down here at 127.2%, down at $72.28 might be the next place where it finds significant support. When it comes to a new stock like this, I do not give it a full allocation. I take a very conservative approach, buying really small quantities. One of my favorite investment adages is to start with such a small quantity that you feel like you're wasting your time. Naturally, this quantity will vary depending on how large your portfolio is, but even if you have a really small portfolio, consider buying even a share at a time. With commissions not being a thing anymore, there's no reason to go in big. You have no idea where this stock could go. And as I like to say, you can always buy a stock higher, but you can't buy it lower. In short, what I mean is if a stock sells off too much and you're already all in, you won't be able to add to it without putting in too much allocation beyond what you had originally intended. So you might want to start your position right around $75 or even $76, again, starting very small. For me personally, I'm only using a 20% allocation initially and then using very small allocations on the way down, since we don't know how far Rivian could should sell off. This initial Fibonacci retracement actually provides even more levels, and you can see that there's another level down here at the 161.8% retracement at $43.12. But because that's such a big gap, what I like to do is divide the gap by 2 to add an additional buy point. In this case, that gives us another possible level of support at $57.70. But if we wanted to have even more levels, we can draw additional Fibonacci retracement lines. If we draw from when Rivian broke through initially and then made a new high, you can see that we have new support lines, with one interesting one down here at $76.60, which almost lines up perfectly with where it pulled back early in January. After that, you can see that this new Fibonacci retracement provided us with a retracement level at $57.51, which lines up almost perfectly with my approach of dividing the gap by 2. After that, we get a support here at $43.12 and another support down here at $38.42 before we make it all the way down to $26.62. When it comes to a new stock like Rivian, it's pretty much the Wild West, so it's really arbitrary how you determine the levels where you're going to add to the position. The key thing is to never add too much at once. For me, I look at a stock like Rivian a little bit like a lottery ticket. I'm going to get as many shares as I can get by being extremely conservative, but if it ever bounces and heads higher, I'll be extremely careful not to add to it unless it sells off dramatically. If I'm never able to build up a sizable position, so be it. I'll just go with what I have and see where Rivian takes me into the future. So from here, let's take a look at my own position in Rivian, and I'll show you where I started at much higher levels and how I'm managing it as Rivian sells off dramatically. I made my first buy in Rivian on November 12th at $127 a share, nearly 3 days after it came public. Long-term viewers of my channel know that I hate buying IPOs on the first day. Whenever I do it, something always goes terribly wrong, so I try to give them at least a couple of days of price action before I jump in. Like I mentioned earlier, I'm using very small quantities when it comes to Rivian because I knew we wouldn't know which way it would go, and after my first buy, it looked like I had made the right move. Of course, that wasn't the case, and when Rivian broke through support after making its all-new high, I decided to add to the position on December 20th at $93.25. This buy lowered my per-share cost by 8.86% from $127 a share down to $115.75 a share. At this point, I decided to use Fibonacci retracement from the low of that day to the high of the day to try and develop a level where I might be able to buy additional shares, and I came up with $83.46. And you can see this wasn't a terrible approach, with my next buy order going through on January 6th of 2022 at $83.75. This lowered my per share cost an additional 6.91% down to $107.75, which is where my position is currently. However, even buying at $83.75, you can see I missed the bottom by a really large margin, as it ended up going down to $75.13 that same day. From here, my next price target is $69, and the reason for this is it's going to give me an even $100 per share cost. Like I said earlier in the video, sometimes when you're talking about a new position, the way that you determine levels where you'd like to add to your position is totally arbitrary, and in my case, I just like round numbers. I like to have it end in a 5 or a 0. So be it. The way you decide to add to your position can be completely different. It's one of the great things about long-term investing is it's all up to you. You get to manage your own creativity when it comes to approaching an investment. Even though there's a lot of price action and activity going on in Rivian right now, this is a long-term position for me. So I will continue adding over time, watching price action, finding levels of support, and deciding whether or not I want to increase my position from there. However, because it's a small position and because I'm looking at holding it for at least 20 years, I'm not looking at taking profits anytime soon until we see where Rivian could go from here. Although it is important to remember that in the climate that we are economically speaking, this is going to be a really rough stock. So again, be extremely careful and take your time when it comes to adding to this position because we have no way of knowing how low it could go. You can follow my moves for free at getirk.com, where I update my investments in play portfolio every single week. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.